lost 20,000 in one day, which arguably is a huge amount.
The worst.
What happened?
Weren't prepared to ever give it up. Never been in that situation, no matter how hard it's been. Family-wise, I kind of kept that away from my family about trading. So the first 2 years that we mentioned before, where I was unprofitable and I was trading live accounts, probably lost about 80 grand. My old mentor at the time, he didn't trade with stop loss. And it's very difficult to sort of get out of that routine now.
On the flip side to that, like, arguably, people would describe that as gambling.
Trading's gambling anyway. Yeah, I could always see the vision of it. It was so hard to believe that I'd get there.
Today we're joined by Louis G, a trader who has made over $150,000 trading prop firms in less than a year. His first ever successful payout coming from Quant Tekel. He's been trading for 5 years, 3 of which were a learning curve, before finally seeing consistency and payouts on his 4th. Welcome, Louis G. How are you doing today?
Thank you, very well, thank you.
What brought you into the trading space, obviously, before you had 5 years within the markets already and within prop firms and the Forex markets?
So basically, it was introduced to me through a staff member at the time in a previous business that I had. He was into trading and he introduced me to it. Obviously, he used to work for me in the detailing company. But yeah, he got me into trading and then started looking into it from there myself. Not looked back since.
And what was your learning curve to get there? Was it essentially guidance from a course, style, a singular person, or just an overall view of entry into the markets?
I've done every learning course you can think of in trading. I've been through them all. I've blown accounts, blown live accounts. I've done all of it. So
with the blowing accounts, obviously you reached your first successful payout with us, which was last year around August time, I believe.
Yeah, August 24.
So in August 2024, you got your first payout. Up till that point, what do you think was the turning point before you knew you became profitable?
I think probably finding prop firms had a big part in that, because I used to trade a live capital, and then I was introduced or found prop firms, and then it didn't really make sense for the amount that you pay for the amount of capital that you can receive. So obviously I went down that route, started looking into them, and obviously didn't quite understand the rules properly at first. So I blew a few accounts, blah, blah, blah. And then after I thought, right, I need to sit down and sort of look into these firms and read the rules. That's when I started to see more consistency, because I had more rules to follow.
So with the consistency, obviously you do touch base on it. It seems to be quite a common ethic within the Forex space, especially the prop firms. What would you say expansively was your consistency finding point? Obviously, to get through that point, a lot of people gradually will buy accounts, they'll blow them before they reach a critical point until they get the payout.
I mean, for me, it was just I was just sick of burning through accounts. I was just sick of buying accounts and blowing them. Ultimately, that money's got to come from somewhere to buy these evaluations. So, it become quite a tight time when money was running out to buy any more evaluations. I'd not yet received any payouts from these accounts. So it was kind of like, I need to figure this game out.
Yeah.
Yeah. And then from there, it was just like, right, study all the rules of these firms, come up with a plan, come up with a strategic plan of how I'm going to risk on them. What's my risk going to be per trade and stuff like that. And then, once I started to get more rules within my trading, then you started to see consistent results coming in.
How much would you say, without trying to dig too deep, would you say you spent on evaluations or challenges with companies before you became profitable?
So the first 2 years that we mentioned before, where I was unprofitable and I was trading live accounts, probably lost about 80 grand of my own money.
So quite a large sum of money, especially in current economy wise. That's a lot of money for some people. What continued your drive to spend to get there when obviously you're burning money? Did you not see it as just a failed waste, or was there a time where you just wanted to give up completely with it?
Yeah, loads of times, but ultimately, I'd spent 80 grand at this point. What am I going to do? Just sort of give it up? I had to try and make it work, because my personality, I wanted to get that money back.
Yeah.
Do you get what I'm saying? So ultimately, I weren't prepared to ever give it up. I've never been in that situation, even no matter how hard it's been. Never thought, I need to quit this. There's been many a times where I've thought about it, thought this ain't for me, whatever. But ultimately, you don't really lose until you quit.
And obviously your past coming into this would be a defining factor of where you come to. Obviously you mentioned detailing, so I assume car detailing business, you had that.
Yeah.
Obviously you would have put time into that. So the hours working, when and how did you find time to teach yourself or learn or follow the courses, etc.?
So the car detailing, that was a 10-year-old business that I started when I was 17 from a mum and dad's drive at home. She used to wash cars on their drive, and then eventually it went to getting a little van. Then it went to getting another van. Then it went to getting a unit. So that was a successful business for 10 years. And ultimately I had to close it down because I was spending too much money trying to make trading work. But in that time when I was learning how to trade, the place I was at was on like a trading floor.
Yeah.
So I was spending more time on the trading floor than actually at work on the car detailing business. So that took a hit from me.
Arguably it became a priority for you to just continue the journey rather than stop, let it all go. You sort of had to make a decision to leave the business and continue the path into Forex.
And the worst thing was the trading floor that I was on. I was paying quite a bit of money to be on there, per month.
Yeah.
Trying to learn, and obviously I'd not seen any results. I was gaining education, but I'd never actually had any payouts. So after a year of that, I'd spent quite a bit of money on there. So I had to make the decision to leave the trading floor and then go back to work because obviously money was running out.
Yeah, obviously.
Do you know what I mean? So I had to go back to work. When I went back to work after that year, obviously I had staff and stuff there, but it's not quite the same when you're not there. So when I went back to that, I'd realised how much damage I'd done on the business by not being there. The amount of clients weren't the same, the cars that we was doing weren't the same, the turnover weren't the same. So ultimately I had to make a decision. Do I give everything back to the business now to try and pick that back up, or do I sack it off and try and make trading work?
And obviously that would have been quite a hard decision if you've got multiple staff on board. It's not just no longer your life in your hands, it's you've got multiple staff potentially with families, children and bills to pay and everyone. So you've obviously collectively made a decision from there to go, right, business or let me continue my journey because this is my path versus trying to follow something that wasn't working for you at the time maybe, or it wasn't gonna work, but it wasn't what you wanted to go with.
Yeah, I could always see the vision of it, but it was so hard to believe that I'd get there. And the reason why it was so hard to sort of walk away from the business was I've got a little girl as well who was like 1.5, 2 at the time. So I have someone to provide for. The detailing business was providing me income. Trading wasn't. So obviously I had to provide for her. So ultimately it was a selfish decision to shut the business down, but that's what I believed in at the time.
So essentially a life gamble. You took a sort of a gamble with it.
100%.
But more than a gamble, you turned it into a positive to go, right, here we go. This is where I'm at. This is my path. This is how I'm going to turn it in.
Yeah.
And you've come away from it.
Yeah.
And you've come into profitability, which is, as we know in the markets, hard.
It come to a point where, because I'd invested so much time and money into trading, I thought I can't just give up on it now. Do you know what I mean?
Yeah.
I can't just leave everything as it is and just walk away from it, because I could always see the vision of where I wanted it to go as well. So that's kind of what
the drive
kept
to
me going.
success is there, as they say. The most successful people have got the highest drive.
Yeah.
So with your entrance into Forex, obviously, bear in mind there's 1,000 strategies out there. There's every day there's a different advert. Join this. It's the most profitable. It's 100% win rate. And as you hear all say, what would you say was your hardest learning curve? Was it with a strategy? Was it with a platform? What sort of twisted it for you to keep you pushing on? And what did you like throughout?
I'd probably say the hardest bit was the strategy weren't that hard anyone can sort of figure a strategy out. I think that's the easy part of trading. Psychologically, I think the hardest part is you've got to risk this money. You've got to put your balls on the
So obviously you mentioned your daughter, which obviously makes a massive impact on things, because psychologically that is, you want to make sure that she's fed, clothed. There's a lot of resources and finance there. What did your family think in regards to your daughter? Because obviously while you're working or you're going to a trading floor, obviously you're still trying to do the detailing. Who was then obviously looking after your daughter? And schools and nurseries and things like that?
She was at an age where she was, going to nursery and stuff, my daughter. So family-wise, I kind of kept that away from my family about trading. So obviously they knew that I was getting involved in it, but they don't really know how deep I was into it. Do you get what I'm saying?
So they didn't understand your level of involvement. They just thought it's some crazy thing out there that you were trying to do.
Just thought it was because I've been quite an entrepreneur throughout my life in things, starting things, failing things. Some things have worked. So to them, it was just something else I was getting involved in, but they don't understand it. Not many people do understand trading.
And was there, without obviously going too much into personal circumstances, but was there times where the finances just weren't there and you thought, what am I doing? Is this, should I just give up now?
Yeah, loads of times that has happened. Like loads of times, not so much now, but especially back then, it was tough. It was tough.
And are there any times, obviously your family or close friends saying to you, are you sure this is the way? Are you sure this is it? Once they sort of realised what direction you were going, before hitting profitability, was there any times they said, no, you've wasted too much money, it's a waste now, forget it, just go and work?
Not really, because like I said to you before, I keep a lot of things to myself. So my family didn't really know how deep I was involved in this. So it's kind of just been on my own with it, yeah.
And did it have impacts on your mental health side of things? Because obviously you've got a business, you've got no income, or you're struggling income there, your income's low, you've got outgoings that are topping up. Obviously, some would argue that your mental health would take a huge strain.
Yeah, it's been a very tough journey, to say the least.
And was there, once you got to the end of that, was there levels of success that you were like, I'm glad I did this, or turning points at which you go, right, I'm glad, or there was a point you just gone, yes, it's happened?
Do you know what? Probably when I got my first payout off a prop firm was when I thought, I can. The vision's finally starting to come together now. Although I'd not made back everything I'd invested, I was getting something back. Do you get what I'm saying?
Yeah.
So I'd started to see like, right, so this is possible then. Where can it go from here?
More on your background into trading. When you obviously had a strategy in mind, what strategy is it that you preferred, that worked for you?
Yeah. So when I first got into trading, there was no strategy at all. Pretty much just gambling, buying and selling wherever. Then when I told you about the trading floor that I was on, that was a strategy called 50 cal. I don't know if you're aware of that. It was mainly like higher time frame stuff, daily, sort of weekly, market structure, and it was trading reversals. Yeah. So it's trading trend reversal, momentum reversal trades. And it was a good strategy, but not for prop firms, which I later found out. It was a good strategy if you was trading your live account, because obviously you can hold on to trades, you can have runners and stuff like that, sort of go with momentum.
Yeah.
But then when I discovered prop firms, I realised that I can't trade this strategy.
What was the reason behind not being able to trade it with prop firms?
So risk to reward was one of them.
Yeah.
It didn't really focus on risk to reward too much. It was mainly like 1-to-1 at best, but focusing on a higher win rate. When you come into these evaluations and you've got profit targets to meet, you need to have a system that's a higher risk to reward and not a lower risk to reward.
And is that, when you say the high risk to reward, because obviously multiple people trade differently, is that what suited you? It's just a low, like your 1-to-1s or your 1-to-2s?
Well, I'm not really the type of person that's likes to lose, and I feel like my personality's come out in my trading quite a lot with that. So obviously, I don't like to have a super high risk to reward, because obviously with that, your win rate's now low. Yeah. So I don't want to see multiple losses after losses after losses before then getting a big win. So I'd rather trade at lower risk to reward, but more than a 1-to-1, but focus on a higher win rate.
And I'm assuming, are they over longer time frames or shorter time frames? Are you just intraday, or are you holding for a week or two at a time?
So on prop firms especially, it's mainly just intraday trading. Now I trade on sort of 4 hour and the 1 hour. Don't really drop down too much lower than that. I've newly been introduced to futures as well, but obviously I've had to adapt my strategy again.
Yeah.
Because you can't hold trades overnight and stuff like that. So I've had to change my strategy a little bit. It's still kind of the same concepts, but mainly on lower time frames again. So 15 minutes, 5 minutes, sometimes even the 1.
I'm assuming you touch base on the lower time frames there, the 4 hour and 1 hour. I'm assuming you tried lower time frames and you just found no level of profitability within that.
Yeah, I mean, I'm starting to see success on the lower time frames now, but obviously as I've got more experience, years ago when you was going on the lower time frames, it was just like mind bending. Like it blew
It can
my
be
mind.
deadly if you're new to the markets.
Yeah, and obviously I don't trade with a stop loss, so them lower time frames, I can lose a substantial amount more money over the course of a few seconds.
And you touch base there, obviously no stop loss, and arguably psychologically having a no stop loss in place is a huge driving factor between the psychological factor for people for security, because essentially it's your safety net.
Yeah.
How do you find not looking when you've got a trade running or multiple positions? Do you monitor them actively, or do you just sort of once have a look at your positions once or twice every hour or day, whatever the case is?
Yeah, so I used to be quite attached to my positions, especially like on my phone and stuff. Like a few years ago when I was just starting to get profitable, my phone would be in my hand constantly and I'd be monitoring that position throughout, because obviously I'm not trading with a stop loss. So I thought I need to be active if this is going the wrong way, because obviously I'll end up blowing accounts.
Yeah.
These days, I kind of just set alerts and kind of leave it to do what it's doing, because obviously my risk management's a lot better now.
Yeah.
So I'm not really going to blow accounts just by losing a few extra pips on not having a stop loss.
So arguably, you said you don't have a stop loss, but you set alerts. Do you set alerts at a level where you look to manually close positions?
Yeah.
And is that then on the flip side of that? So essentially, you are setting a stop loss, but you're setting a mental stop loss versus a hard or a predefined stop loss within a platform.
Yeah. Mental stops, yeah. Do I always stick to them? No, because that's the difference between having a mental stop and a physical stop. You know, if you've got a physical stop on, as soon as that gets hit, you're out of the trade. But with a mental stop, your alert can go off and you think, I'm going to hold on to this a bit longer. Or I'm gonna add more into this position now.
And what drives you to hold on to it longer?
Mainly the fact of my personality that I don't like to lose. And a big part of it is where I learned to trade. My old mentor at the time, he didn't trade with a stop loss. So I feel like it's kind of been setting my foundations early on.
Yeah.
And it's very difficult to sort of get out of that routine now. Because when I've tried to use stop losses in the past, they've been manipulated out. Yeah. The trade's hit my stop loss, then it's gone in the direction. It's like, if I didn't have one, that wouldn't happen.
On the flip side to that, though, arguably, people would describe that as gambling.
You would do, yeah. More calculated gambling. Trading's gambling anyway.
Do you have a max loss that you would get down to? Say you've set your mental stop loss. It's gone past that level. You've got another level, maybe you're eyeing up or you're looking to closing out. Is there a maximum overall limit where you'll just shut off for the day, for the week?
Yeah.
And what does that look like for you?
It's different on each account. Obviously, each different prop firms have various drawdown limits and stuff. Some might have 2%, 3%, 4%, whatever. Depending on the sort of category that I've got that account in, whether it's high risk, low risk, or medium risk, then obviously, I do have sort of, right, this is all I want to lose today. But once that gets hit, then you just move on to the next day. It is what it is.
And is that a critical stop, like you've never come back from it? Or how do you know that that is the level that your brain's gone, that's it, I'm switching off for the day, I'll go to your daughter, I'll go to see a friend? Or have you always followed that, or was there a point at which a huge mistake happened because you didn't follow it?
Yeah, them mistakes have happened, in the past before. And years ago, it used to be the limit was when the account was blown. And then I'm talking like live capital here as well.
Yeah.
So there's no more margin left to buy any more positions.
So obviously you mentioned trading or Forex in the industry being gambling. Argumentatively, people would say that it's strategic risk versus gambling, where others would say, like you said at the start, where you just first got in, you just enter in, exit in, you don't know what you're doing, your buys, your sells, you're just playing around with the markets. Why would you think it's gambling versus a strategic risk within the markets?
Well, anyone would say going to the casino is gambling, right?
There's levels to a casino because you're relying on
obviously some people could say that's strategic as well.
If you go in with a strategy, then you could argue that it's a strategic risk within the lines. The same as Forex, just with a better return on the odds.
But what do most people do when they go to the casino?
Oh, obviously blow money.
And what do most people do at the start of going to the casino?
Blow a lot of money.
Gambling. Trading's the same. I think everyone comes into trading they'll end up gambling at the start.
Oh, yeah.
And it's very hard to come out of that until you do develop a system, a strategy, and an edge, set of rules, get your psychology in check. All these sort of tick boxes you need to do first, then it becomes a bit less gambling.
Yeah, I have to agree with the entry level into the markets. Everyone you sort of speak to, has played on a platform and they've just buy, sells, no idea of what's going on.
My 4-year-old daughter could do it.
Yeah, literally.
She's done it before. On my phone, MT5, buy and sell.
Yeah, there you go.
Not for, like, I weren't knowing about that. She's done it by accident.
Yeah.
But that's
trust me, we've all had that with the kids.
Yeah, that's how easy trading, you can get involved in trading for one, and it's how easy it can be to do.
Yeah.
You're just literally pressing buy or sell.
So obviously you came from your background, you spent a couple of years trading, you finally built up a level of profitability from your trading floor and you passed, and then obviously you ventured into prop firms. What was your entry into prop firms?
How did I find them?
Yeah.
How did I find them, actually? I think it was just obviously seeing it more and more on social media. People was mentioning about a trade with this much capital, pass an evaluation for this amount. And at first, when I seen it, it was like, this doesn't sound right.
Too good to be true.
How can I spend $400 and get $100,000 to trade with?
So obviously, you mentioned before that you were live, and then you went into prop firms. What was the reason for giving up on live capital? Obviously, you margin called, as you mentioned earlier, with accounts. You, I assume, lost some money, maybe a large amount, small amount of money, and then maybe that was it. You just realised, look, let me try and levy a prop firm versus a domestic personal account.
Yeah, well, obviously, touching base before on obviously the type of person that I am, trading live capital can be, you can lose a lot of money.
Yeah.
And I've done it before. I've lost sort of £20,000 in a single day trading live. So prop firms for me was like that safety net, because I've only got $400 to lose on this account now. If I lose the account, you get what I'm saying?
I've got to touch base. You lost 20,000 in one day, which arguably is a huge amount.
That's the worst.
What happened? Why?
Well, it was over the course of the full day. I think I had £25,000 in this account, this live account, and ended up getting into a trade. It was going against me, adding more into the trade, going against me again. It got to a point where there was no margin left for me to put any more positions on. But also it comes to a point where, do I really want to press close and lose like 15 grand, or do I just see what happens and let it go? It's gone now anyway, isn't it? Yeah. So ultimately that's how that ended up. And then eventually it ended up liquidating all the positions in the account.
And you got the dreaded stop out email when they send you
and it's
multiple
not just
texts.
one. Yeah,
it's multiple.
It's probably over 100 emails, multiple stop outs.
That's a hit and a
That's
half.
where it's closing your positions off.
Did you give anything? Did you give trading a break once that happened? Did you sort of sit back and think, right, I need to just have a fresh start now, a fresh week?
Yeah, I did sort of reevaluate things back then. I took quite a bit of time out of trading. Obviously, for one, I just lost sort of 20, 25 grand. So I needed to get some more money together to sort of start back up.
Yeah.
And going back to prop firms, that was when I found prop firms after that experience happened. After I lost that sort of money live in real markets, then I've started to see about prop firms. And then I thought, right, well, these can kind of be a bit of a safety net for me to get back into trading, where I'm not sort of risking so much of my own capital.
So arguably a blessing in disguise. You could argue that it was a blessing in disguise.
Yeah.
You lost this money, you tried your real markets, you lost this money, then you found props and you found rules and accounts that suited you to try.
Yeah, well, basically, because when I was trading live, I weren't really trading with any rules. And going to a prop firm, I have to stick to the rules that are sort of set out by the firm. So there was a good thing for me to start trading on these, because it put some structure into my trading then.
Yeah.
And then when I started to see, obviously I did make money on live account as well, trading my personal capital, but it was never consistent.
Yeah.
It was like win a large amount, lose a large amount, it was up and down.
So arguably props sort of made you the trader you are.
Yeah, basically. So obviously when I come into prop firms then, and I had a set of rules to follow, I had only X amount I could lose per trade or per day, and I've got a profit target to meet. Because that's the other thing on trading live as well. Where do you stop?
Yeah.
You don't have a profit target to hit. You just keep continuing trading. So what is enough?
Which is why most retail investors lose their money, because there's no switch-off point.
Exactly, yeah. There's no target in mind. Now, obviously, if I was to go back to trading live now, knowing what I know, it would be very different. But back then, you thought the sky was the limit. You could make $5,000 on a trade and think, right, well, tomorrow I need to do 10.
You thought it was the magic bus, on and
exactly.
off you go, as it were. All your dreams are covered.
But that's how trading live markets can be.
Yeah.
It's
an eye-opener for sure, as you said. And then with the props, obviously you traded. What failings did you have on props? You tried some props. We won't go into details and names, but you tried some props. What did you find were the hardest points or the learning curves when you started with a prop account? How many accounts did you go through? Things like that.
Not that many, to be fair, because obviously I'd already been trading at the time for a couple of years now, and I was kind of getting the hang of it, but it wasn't really consistent. So when I got introduced to props, I was like, right, okay, I didn't know how to trade, but there's certain rules and risk parameters that I need to follow now. So let's just add these in and kind of see how it goes. So obviously it was a bit of trial and error at first. I can't start using that sort of position size. I can't risk this much. So I did lose a few accounts or a few evaluations anyway.
How much investment would you say in the accounts before you knuckled down and got used to the remits of what it is to trade a prop account?
I think I know the exact amount. I'm sure it was like $5,000 that I'd put in to evaluations before getting something back. But obviously, like I say, it was trial and error at the time. I'd never traded prop firms. I didn't know what they was. I was just getting involved with them. And coming from the mentality that I had trading live, if I've only got to pay $400 for this, like I didn't really care about it. I'd just buy another one because it was so cheap. Do you know what I mean?
Yeah.
So, yeah.
Did it not play on your mindset, though, obviously, after losing such a large amount on a live account, going to props to then burn through more money? Was there not, again, a point at which you were like, maybe this isn't the journey I need to take?
No, so ultimately, I was used to losing a substantial amount of money. So then when I was buying evaluations and I was losing like $200 here, $300 there, I wasn't really fazed by it because obviously I had some money to buy them anyway. It's not like I was scraping money together to get these. So for me, it was a lot easier to lose an evaluation than it was to sort of lose, 15, 20, 25 grand of my own money. I was only losing $400 at a time. But yeah, I probably spent about $5,000 on evaluations before getting that first payout that I had.
And obviously you reached a milestone, you got to the first payout. What did you feel, and how was you? You got the email, your payout's been approved. You must have been, your psychology must have just taken an absolute rocket and gone through the roof.
It did, to be fair, and it wasn't about the dollar amount of the payout. It was more the fact of you'd done all the necessary steps and you could fight. For me, being kind of being skeptical about prop firms, because obviously they sounded too good to be true.
Yeah.
It was more like, all right, so this is possible then. So from there, it was like, all right, well, where can I take these from here?
So you went from a non-believer to a believer, essentially.
Yeah.
You seen some negativity, you had the argument, and it was like, right, let me chance it. You chanced it, and you got to a payout.
Yeah, exactly. At first, it was like, I just don't understand how I can buy an evaluation for $400, make $4,000, and then get that. But I'll just 10x my investment.
Yeah.
So it didn't really seem possible until that point where you get one, and then it's like, all right, so it is possible then.
So it seems too good to be true, but actually it does work.
Yeah.
It got you there. And obviously you got your money, you received it. What did you do with your payout?
Bought more challenges.
So straight off the bat, you just bought more?
Went straight into buying more evaluations, yeah. Because at this point now I'd thought, like, where can I take this from here? Where do I get more of these accounts from? What other prop firms are there? What are the different rules? And then I started going like more into prop firms then. So it was live trading I've not thought about for the past 2 years. It's just been like, how can I gain more funding with all these prop firms?
And obviously your psychology would have taken a big bonus off of that as well. I've got money, So obviously that would have taken an effect in you purchasing other accounts, because now you must have thought, well, I've been paid out here, I can do it here, 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 here.
Yeah, exactly. And going back to that first payout, I know the exact amount. It was $4,361, I believe.
So a good amount, a good first amount for a prop challenge.
So for me, instead of thinking I've just made $4,000, I was like, I've just got myself 10 free evaluations because they're $400 to buy. So I didn't really look at the money side of it. It was more of how can I sort of scale this from here with these now.
Yeah, so you've had your money and then taken it into props. And out of them props, how many did you keep, or was that the sort of the start of the empire per se? I've got this, and this now.
Was that
out of your prop accounts? How many did you keep before breaching, or did you get payouts on all of them?
The first one I had, I kept that for a good while. I kept that for about 3 or 4 months, and then obviously eventually you lose the account. They're not the holy grail. Like, don't think that just because you've passed an evaluation that you're now going to hold on to this funded account for the rest of your life. They're expendable in my eyes. It's money coming in versus money going out.
No.
So as long as you bring in more in than you spend it on evaluations, like, you should not be attached to these evaluations or funded accounts for that matter. Because for one, you're trading in a simulated environment. And secondly, if you become attached to that funded account, I can guarantee you will not be trading it correctly.
Yeah.
You'll be too cautious, so you'll be missing out on trades. And I just don't think you can sustain it if you're attached to it emotionally.
So what do you say then to people that are or hold accounts for quite a long time? Because there are traders who will consistently have accounts from 6, 7, 8 months, the same funded accounts. What are your thoughts on that? Because there are the traders that hold accounts. We've seen them, people post online, they've got the same accounts. We've seen other props review sites and things like that. They post and they've had the same accounts. Obviously that process, obviously it doesn't agree with you. It agrees to challenge, get a payout, get 2, maybe 3, or whatever the case is, then the account goes on to the next one.
Yeah, for me, it's sort of money coming in versus money going out, like I said a minute ago. But there is other people out there that can hold on to him, but I can guarantee that the money they're getting from these payouts is going to be a lot smaller. Maybe they're doing sort of 1%, or maybe even less than 1%, or they're trading on a smaller account. For me, it doesn't make sense to do that. I'd rather get through an evaluation quick, get the payout quick, and then reinvest it back into more. And I'm completely fine with losing an account because I know that I can pass them anyway.
Yeah. So that sorts your psychology things out. If you're happy and you're content, and you believe in yourself, you'll go for an evaluation, go through funded, and then achieve the payouts, as it were.
Yeah, me personally, like, I don't mind losing an account. It does not faze me in the slightest. Some people, like I said to you before, like, they become very too much attached to these accounts. So they're the type of people to take it steady, take it slow. But for me, it doesn't make sense. I'd rather just trade it with no emotion. And yeah.
Would you argue that the no emotion approach would be sort of a all guns blazing?
No, it's not all guns blazing. But what I mean by trading with emotion, like, people would be too scared to risk on them. Yeah. So they'll be looking at it like, if they're trading on 100K, they'll be like, they won't think in percentages.
Yeah.
They'll thinking, I'll risk $200 on this trade. But then when you actually look at the percentages of that, they're not risking enough, because they're not going to be getting any sort of payout out of them. It's just small.
Yeah. So then what are your views with, obviously yourself, you like to go, and I'm assuming you like to risk quite heavy on your evaluations or balance risk. Obviously there's people that will limit risk, they'll risk fractional of a percent. Then you've got other people that will push upwards of 2-3% right within the drawdown limits of the prop firm account. What suits you? Like, what is your preference? Do you like to keep it sort of a middle ground risk and just float through, or do you just think it's a prop account, I can buy another one, let me just throw money at it, full margin essentially, and hope for the best?
Yeah, so obviously now it's different. It's different like now. Obviously now I've got a bit more of a structure behind me, a bit more of a plan on how I approach these evaluations. The only thing I will say is people that haven't gotten a payout yet probably don't try this approach. I'm only doing this and trading this way with these evaluations because I know that I've got a return on my investment. Yeah. If you're in a position where you haven't got a payout yet, then you do need to trade them with strict risk management until you get to that point. But for me personally, if it's a fresh evaluation if it's a normal 2-stage evaluation, the first stage I'll risk the daily loss limit on a trade, and it's not going to be. I'm not on about I'll just buy or sell anywhere. Obviously, there'll be structure behind it. The trade will be there, but I will use that daily loss limit on the evaluation phase.
So that's a massive point of contention there, as you're probably aware. Risking, most people within the industry would advise you split your daily drawdown into either 1%. So if you've got 4 or 5% daily drawdown and you've got, say, let's argue 5% drawdown, there's 5 trades or there's 10 trades because you risk 0.5% per trade. Others, as we know, and we've seen them out there, will arguably risk 2%, 3%, or they'll try and risk it on 1 or 2 trades. And obviously there's a point of contention, quite a bane of contention with this, where risking that much from the prop world is sort of, in essence, they say gambling, even if you've got your markups and your setups there. The argument would say that it's gambling to an effect, but like you said, covering it with make sure you've had your payouts and making sure that, like a well-oiled machine, you're keeping the wheels turning. You've got an evaluation, you're going for funded, and you're keeping things flowing throughout.
The evaluation stage is the worst because you're not earning any money from it. Time is money ultimately. So I don't want to be micro risking on an evaluation for me to spend the next month or 2 trying to pass it, because you go on tilt once, you could lose your funded account. Yeah. So if it's taking you 2 or 3 months to pass this evaluation, and then you go on tilt and lose it, you've lost 3 months of time. You've not lost the $400. You've lost the 3 months of time that you've been doing that.
So you look at things very much strategical sort of investment. Like, I've invested in this, I need to see this on X, Y, Z time frame. Instead of giving yourself, say, right, I've got 5 accounts, I want to give myself work through them. Instead, I want to get through them as quick as possible, see what I can churn over, and like a well-oiled machine, essentially, just keep the cogs churning, keep going, risk whatever. Do you change that approach when you get to funded?
Yes. That's the next topic we need to touch on. So obviously, I do have quite a high-risk approach during evaluations, and phase 1 is quite different to phase 2 as well. Because obviously, I feel like there's no point in rushing through phase 2 when you've got half the profit target. Yeah. You might as well take your time a little bit more on that, but obviously not too much. So obviously, phase 1 evaluations, whatever daily loss they'll give me, whatever I'm allowed to risk without being considered an all or nothing type of trader or a gambling trader. Yeah. If they can tell me I can risk 3% per trade, I'm going to risk 3% per trade to get through that phase 1.
Yeah.
Then when we go on to phase 2, I'll normally half my risk. So whatever I was risking on the phase 1, I'll half it for phase 2. Because the reason why I half it is because I've got half of the profit target now.
Yeah.
If I had 10% to do in phase 1, I've now only got 5% to do in phase 2. So I can have the same approach, but just half my risk.
Yeah, which makes sense.
Yeah. And then funded accounts now, because I've got sort of scaled quite a few funded accounts, I can sort of really bring that risk down per account. So again, the risk will get halved again.
And how are you finding it as a trader within the prop firms? Are you finding that you're being warned a lot from your trading style, from the props and whatever rules they've got in? Are you being advised to do anything that may suit them, to suit the guidance, or they're just not happy with you, they don't want you trading with them, whatever the reason may be?
I've never been banned from any firms. The only time I've had a slight hiccup was I was over risking on an evaluation, and they put me in sort of a risk management group.
Yeah.
Where I had to half my lot sizes. So if I was allowed to use 80 lots on a 200k account, I was only allowed to use 40.
Yeah.
That is the only sort of issue that I've had trading the way that I do and trading these evaluations the way that I do. But as I mentioned, I don't trade the funded stage the same as I do with the evaluations. Yeah. So there's no real need for me to be in that risk management group. I just have a sort of systematic approach to phase 1, phase 2 funded.
I've got to touch base. So obviously you were sort of essentially given 50% of what you could do. They said 50%, here's this. What was the psychological impact of that? Because obviously
I lost the account straight away.
Yeah, and this is where I was going to touch base on, because obviously your trading style is essentially this way. You've now been told, well, we want you to do, instead of 10 lots, we want you to do 5 lots. But it's not just as easy as that from a trader, because as you know, you trade, your set style is everything. If you go outside of that, you've now thrown all these other metrics in that don't compute, but it may or may not work.
And to be honest with you, I didn't want that account being in a risk management group. So for me, it was like, I don't really care about this account. I'll lose it and I'll just do another one, because the next one that I do, I won't make the same mistake I did on the first evaluation to put me into that risk management group. So this one now, I'll lose the account. I did end up losing it. I bought another one, passed it again, and then I wasn't in a risk management group because I didn't bring them. Again, it comes down to mistakes and lessons. I picked up on what mistakes I've made that led me to being put in that risk management group, and then I applied it differently when I went and bought another one.
Yeah, so you took on board what they said essentially and was like, right, let me try and map that so it's sort of the hard-coded set of rules to follow within the guidelines and the guidance of what they need.
Exactly, yeah, pretty much. And then, like I said to you, I don't want to be trading an account where I'm in a risk management group. I've got limitations on my lot size. Like, they're already hard enough, these accounts, without being put into these groups. So for me, it just made more sense to get rid of it and do another one. And if the prop firm said to me, like, if you ever become any other funded accounts will be in this risk management group, then I won't use that prop firm. I'll move it to a different one.
Yeah, so you avoid it altogether.
There's enough rules, there's enough limitations on these prop firms to be adding more into it.
Would you not argue, though, for the evaluation fee being the cost they are, as we know, can vary greatly. For the 100K per se, you can pay $400, $500, $600. Would you not argue that they need some form of management within or higher level risks to sort of balance the flow out?
Yeah, they do. And obviously that's why I changed my approach when I went and did it again with them. So I kind of took the feedback on, but I thought, I don't want to be trading this risk management account now. So I'll go and do another evaluation, listen to what they kind of said to me on risking so much. And then, like I say, I passed another one and then I got funded and I wasn't in the risk management group. Yeah. So obviously I took their feedback on board.
So you took it on board, you got around it, you breached your account and decided, look, come back, and they sort of left you to it. You followed all the guidance, essentially, and you took it on board. So arguably, it's sort of a blessing in disguise, because you took what they had that you didn't know was there at the time, and you took it on board. You've done
at the time of doing this evaluation, I didn't know that if I traded this way, then I'd be put in this group. It's trial and error. Yeah. And when it happened, I was like, all right, well, why have I been put in this group? Well, you've done it because you was trading this sort of style. It doesn't fit with our firm and stuff like that. So I was like, all right, well, I'll change that then. I'll change that approach. And then when I did that, it was fine.
And when you did that approach with that firm, did you find overall the trading enhanced across the board for everyone else, or all the accounts you had?
So that was I only applied that sort of methodology to that specific prop firm. Yeah. So you need to, if you're trading with various different props like I do, you don't just need to have one set of rules, because each firm will have different limitations. Each firms will have different leverage. Each firms will have different drawdowns, profit targets for the evaluations. Like, you need to really do your research into these firms before you go and do it. I was very much the type of guy when I first got into them, like, I'll just get one and try it. Yeah. But now I would advise everyone to do your research into these firms, especially if you've not got the money to just be burning through evaluations. I'd probably say do your research, look into the firms, get to know the guidelines, look at the rules, and then come up with a plan to trade with that particular firm.
Yeah, that makes sense. That makes sense.
Yeah. A few different strategies that I use, because obviously I trade CFDs and I also trade futures now. Yeah. And I can't have the same approach. I can't use my CFD strategy with futures. I've had to modify it a little bit. Yeah. So I use bits of ICT. I've never studied ICT. I've never watched one video on ICT, but I do use bits that correlate with ICT. So I'll use fair value gaps, or I'll use imbalances. Then I'll look towards, I always start on higher time frame. So I don't really trade the daily much anymore, but mainly the 4 hour. So I'll start on the 4 hour. I'll see if I can identify any fair value gaps. Once I've identified a fair value gap, I'll then try and combine other confluences within that area. I'll look at market structure. Are we bullish? Are we bearish? Where do I think price is going to go? So I don't try and perfect my entry. I try and envision where I see price going. Where's the next leg going?
Yeah, that makes sense.
And then I'll try and find an entry that'll fit to hit that target. So like I said, I do use bits of ICT. I use fair value gaps. Then I'll also like to use Fibonacci's. I don't know if you've used Fibs before, but I won't use them on their own. So I'll use trend lines. I'll use Fibonacci's. I'll use break and retest areas. I'll use key levels. But I don't trade them all on their own. I like to combine them into this sort of fair value gap area. So if I identify a fair value gap, does it align with a 61 fib or a 50 fib?
Yeah.
Does it align with a break and retest?
Have you got your own fib levels that you play off as well? Because obviously a lot of, well, arguably your ICT, your smart money, your support and resistance, whatever you want to name a strategy out there, you've got your 61.8, 71.9s, you've got your 100s, your 50s. Obviously, some of them are using Gambox. You've got your 10%, 50%. Do you have your own fib levels that you play off as well, or have you left the preset fib levels to play?
Yeah, I only ever use the 23, but I don't really like to trade from that. It's on my fib, but I'll use the 23, I use the 38, I use the 50, and the 61.
So you don't go higher than a 61, you keep it, that's your level there.
Yeah, and the main two that I use the most are probably the 38 and the 61. If I'm trying to catch onto a trend continuation, then I'll look for that from the 38 level to then extend to the next level.
Yeah.
The next leg up. The 61 is more of a reversal area for me. So if I'm trying to catch a trend reversal, I'll look for something around the 61 level.
That's an interesting point, because obviously following any sort of smart money concepts, any other strategy, normally if we're in a bullish trend, they look for a 50% retracement before the leg goes. And you're probably aware of that. They look for a 50% or a minimum 40% before a continuation put on it. But I'm assuming within that, do you use anything outside? Do you use things like COP reports, economical factors, the fundamentals? Is there anything like that helps you navigate the markets, or do you leave the sort of the heavy fundamentals and technicals alone and just trade with what you see on the chart?
So I trade gold mainly.
Yeah.
I'm not a big fundamentals trader, and that's probably not my strong point. That's why I don't use them, because I don't understand them.
Yeah.
But what I have learned with fundamentals is that I know when to stay out of the market. So not necessarily will I use them in my trading. I'll use them to know when to stay out of the market.
Yeah.
And a perfect example of this is this week's market open. We had Ukraine and Russia headlines, global war tensions.
Yeah.
I was heavily bearish on gold last week. Once these headlines started coming out, that's what flipped my bias.
Yeah.
Because I don't want to be short in gold when we're potentially going into war tensions.
Essentially, buy the rumour, sell the fact, as the institutional term, as they argue. So you are sort of using it per se. If you're in positions, does it influence if you close out earlier, or do you sort of just ride it until you're like, right, I can't see this is happening, or I'm just going to close the position and leave it as that and come back tomorrow?
I don't use fundamentals to determine for me to get in or out of a trade if I'm already in one. I won't really look. I don't really dive too much into fundamentals. But what I will pay attention to is sort of global economic facts. And if it's looking like we're going into sort of war tensions, then I know that I'm wanting to be buying gold. I'm not going to be selling it.
Yeah.
And vice versa. I use the stock market, for example. So if we're in a risk on environment, I'm not really wanting to do the opposite.
Yeah, so essentially, while you may not use them sort of completely on the fundamental side, use them for an overview to give you an insight to go the sort of what we arguably the common sense approach.
Yeah.
That if there's Russia and Ukraine are going at it, logic dictates that gold is going to become safe haven.
Yeah.
Whatever's going on throughout the war, peace talks, Trump tariffs, as we know, it's causing it to move. So you're using them as a guiding factor for what you do within the markets.
Yeah, and I feel like at the level I'm at with my trading now, I am starting to look into them a bit more. But for the past 5 years, I've not really paid too much attention to fundamentals because I'm a firm believer of price will tell you where price is going. And fundamentals will often drive price to those areas So I don't really need to understand them if I know where price is going. Do you get what I'm saying?
Would you not say, though, that obviously coming from your background and where you're up to now, that arguably learning sort of the economics and the fundamental side of things could improve you massively?
Yeah, and I'm
within the
starting
market?
to see that now. I never used to pay attention to headlines, but obviously trading gold pretty much heavily for the last 5 years. Sometimes I've been in trades and thought, why has that happened? Like, market structure was clear that it was going down, it was bearish, and then it shoots up, it fucks up there.
Yeah.
And it's not until now that I'm realizing, like, global war tension, gold safe haven, that's probably what's pushing price. So ultimately, fundamentals drives the market.
Yeah.
So I'm starting to understand that now, and I'm starting to implement it a lot more, and I can see it being very beneficial.
So you would have seen, just to give some history on gold, obviously in 2023, I believe it was. Remember when the war started and gold rallied? I believe it was for like 4 months.
Yeah.
It just rallied and rallied. Obviously, every man and their dog made some money on gold.
Yeah.
Some people lost, but majority
Yeah.
made. And obviously, that was a driving factor for a lot of people. And a lot of people I speak to, that was their turning moment to actually, I need to get on board with fundamentals and macroeconomics.
Yeah.
Of what causes price to move and why it's moving.
Yeah, I just feel like you need to tread very carefully in it, because it's a whole new world, the fundamental market, and looking into the fundamentals. So I wouldn't necessarily deep dive too much into it, but at least have your wits about you and get a good understanding of them. And obviously look at market cycles as well.
Yeah.
Gold is known for going on a bit of a bull run around Christmas time. And if you look back on the charts, you'll start to see these market cycles happen. So obviously, once you're aware of your market cycles, you know if you should be shorting or you should be going long.
So when you talk about market cycles, you talk more about the seasonality, the essence.
Yeah.
Your Q1, Q2, Q3, and Q4 swap over. So when you obviously use all of that and you're slowly getting a grasp and you're digging more and more into it, sort of not to better a position, but to improve yourself as a trader, which ultimately is the goal. You always want to improve.
I don't think you'll ever reach a point in your trading where you think, I've learned everything, like this is it for me now. You're continuously going to be looking to improve. You're continuously going to be looking for ways to take better trades, grow more capital, scale accounts. Like, you're always going to be trying to better yourself, and I don't think that'll ever go away.
What would you say 3 things are, as of now, that you would change yourself and your trading to improve it or better where you're at?
Fundamentals, I need to dig a little bit deeper into fundamentals. I'd like to understand a little bit more about them and obviously what drives price. Because it's all right saying obviously price action is king, but really fundamentals is king. Yeah. It doesn't matter if you've had a market structure shift and the fundamentals is going the other way. Fundamentals will push the price.
Yeah.
I think I'd like to get back into trading live, my live accounts, knowing what I know now. I have not traded live for the past 2 years since I was introduced to prop firms.
Yeah.
So I would like to navigate my way back to live accounts. And then was there another one?
Yeah. Third thing. What 3 things would you change now or get sort now to sort of improve your standing?
And lastly, I'd probably start using a stop loss.
So would using a stop loss not go against everything you know up to this point instead of the mental?
Maybe, but maybe it was a case of I didn't know how to use one properly back then. So obviously I've just never traded with one, but was I using it incorrectly, basically? Yeah. Was I placing it in areas where my trade idea wasn't actually invalidated? So that's kind of where I want to go from here, because I don't want to go back to a live account without being able to use a stop loss.
And obviously the history being the history and the large sum of money being lost, you don't want to sort of front run that and have that risk on the table.
No, because I know what type of person I am if I'm sort of fixed into a trade.
Yeah.
So I'd like to be able to use a stop loss correctly and add that into my current trading now, along with fundamental biases and stuff like that. They're probably the 3 main things that I'd do to improve my own trading now.
Yeah, that makes sense. What would you essentially drill into yourself if you met yourself starting into the markets now?
The main thing for me is I'd invest in a good mentor, because I'm very much the type of person that have kind of built this on my own. I did have a mentor, or I did have a place to learn initially, but when I started to build a system and a strategy and actually start being profitable, I've done that all on my own. Yeah. So I've had to build all that myself. So what I'd advise to traders now is invest in a decent mentor, that's someone that's going to sort of hold your hand through the way. They can share their struggles and losses onto you, so you don't make those same mistakes yourself.
Yeah. So your head now on your younger shoulders when you entered the markets, what would you change? What would you avoid? What would you adapt? What would you do?
Another one is, I'd say, be very wary about social media. There's a lot of hype on social media. There's a lot of fake gurus out there. There's a lot of bullshit. There's a lot of different strategies. There's people giving guides and ebooks out all the time. Like, there's so much information on trading that it'll blow your mind, and you'll never be able to sort of fix and dial in on sort of one thing. So I'd avoid social media, or I wouldn't compare yourself to anyone on social media.
So how would you then advise people with the avoidance of social media? How would you then advise them to sort of what course to go for, what mentor to go for, who to look? Because obviously most of this, as we know, is social media. It's a playground for everything Forex. There's everyone's there. Everyone's got a course, everyone's got a mentorship, everyone's got a guideline, they've got something going on.
Yeah.
How do you dictate who's worthy and who's not?
I'd try and find someone that you'd like to be. So if you try and find someone that you want to be, do you want to be in their shoes? Are they doing the things that you want to do? And then that's how you'd be able to find the mentor that you should be getting. Yeah,
which makes sense, because obviously there's a lot of, as the strategies vary, people need to understand what they're going
traits as well.
It comes down to a mindset, and
it's not just the
psychology.
It's not just the strategy that's the issue here. It's them personality traits of a trader have been developed around that strategy. So he trades that way because these are his personality traits.
Yeah.
He trades this way because they're his. So they're all different.
Yeah, and it's nice to have that fallback that you've got someone to rely on. You can discuss, look, I did this. I know I made a mistake here, or where did I make a mistake that I can't see?
Yeah, exactly.
To have something to fall back on.
Because going back to when I said that I didn't have that when I was building my sort of system and my strategy. So it was very difficult not being able to just speak to someone about it. Like, why have I made this mistake here? They're lessons that I've had to figure out for myself. Yeah. Whereas I feel like a real benefit would have been having someone there to speak to and say, why have I messed up here? Or what could I have done to improve on this? Those are the key things that having a mentor should be about.
Yeah.
And I feel like if I had the right person a few years ago, it wouldn't have took me as long to get to where I am.
So on that, just to briefly touch base, you would arguably say that trading could be a very, very dark and lonely place.
Yeah, 100%.
If you're on it alone. Because 100%. If you've not got a mentor, you've not got someone to fall on. Obviously, like you said earlier, you're not telling family and friends because...
It's difficult to tell family and friends because they don't understand.
Yeah.
They don't understand what's going on. Like, why are you emotional about losing this trade? It's not really about that. So it's difficult to speak to people that don't understand trading. So I feel like, again, this is why it's so beneficial to have a decent mentor that understands and that's been in that situation that you're currently in to then help you out of it.
Yeah, which makes perfect sense.
Yeah. Obviously, people have family and friends that they can speak to, but if it's not trading related, then it's not going to help them, is it?
Yeah, which literally it falls back to what I said earlier. It can be a very dark and lonely place if you're not in with the sort of the right mentor, the group, or whatever the case is of communication with people.
Yeah,
discuss things. So, in your eyes, as it stands, what would you say is the biggest mistakes from new entrants into Forex, whether it's personal, whether it's prop, whatever the type of account? What mistakes are they commonly making that you've seen?
So I can't personally comment for the vast majority of people, but from what I can comment on is from what I've seen in my students is a lot of them just aren't simply listening to the guidance that I'm giving them. And you're basically giving them a full playbook of what to do. And the simplest thing that they need to do is stick to it.
Yeah.
And because I'm quite big on holding people accountable within sort of my program. And if I'm seeing that they're not doing the things that they're supposed to do, that's why they're not getting the results that they should be getting. So ultimately, it's like they're just not listening to advice. They're thinking they know better.
Would you think it's they know better, or it's they're trying to chase the dream of, which we all know is a perception within the markets that, I can turn £100 into £1,000 within 10 minutes if I enter the markets?
Yeah, it could be that. I mean, some people just don't like listening to advice. They don't like being told what to do. But ultimately, they're not going to make it in trading unless they start listening to people that have been in that situation before.
Which makes perfect sense, because then it falls back to a personality trait. If you haven't got the personality from the markets haven't got it for you.
They're seriously not for everyone. Trading is not for everyone.
Yeah. So before we wrap up today, great session. Have you got any final thoughts?
No, it's been a great podcast. Great time coming down here. Love speaking to you. And I feel like we've covered quite a bit on this session. So I've not really got anything else to add to that.
Amazing. It's been a pleasure having you on, Louis G. Thank you very much for coming in today and enjoy your trading journey.
Thank you very much.
Lovely.